Picture this. You reach for your phone first thing in the morning, still half asleep, and see a notification that makes your heart drop. Your banking app won't open. You try again. Nothing. You switch to the news, and there it is, breaking headlines about temporary banking restrictions. The ATM on your corner has a handwritten note taped across the screen. Stores are turning away cards. And just like that, the money you thought was safely tucked away has become unreachable. This isn't science fiction. It's a pattern that keeps repeating across the world, and most people don't realize how close to home it really is. Let's go back to Argentina in 2001. The economy had been crumbling for years. Bad decisions, mounting debt, failed promises. People saw the writing on the wall and started pulling their money out, converting pesos to dollars, trying to protect what they'd worked for. The government panicked. So they did what desperate governments do. They locked the gates. They called it the Corralito, a cute little word that translates to playpen. But there was nothing playful about it. Argentinians could only withdraw 250 pesos a week. If you had dollars in your account, too bad, they were converted to pesos that were losing value by the day. Savings evaporated. Retirement funds vanished. Families who considered themselves middle class found themselves scrambling for survival. The streets filled with people banging pots and pans, their rage echoing off the buildings. Trust in the system didn't just crack, it shattered. Fast forward to Cyprus, 2013. A small island nation in the Mediterranean, part of the European Union, supposedly protected by all the safeguards modern finance could offer. Then the banks started failing. The EU stepped in with a bailout, but there was a price. Accounts holding more than 100,000 euros were raided, yes, raided, to keep the banks afloat. It wasn't the ultra-wealthy who suffered most. It was small business owners who couldn't make payroll, retirees watching their pensions disappear, parents unable to pay for their kids' education. The message was clear. When the system is in trouble, your money becomes the solution. Or look at Lebanon in 2019. Decades of corruption and mismanagement finally caught up. The banks imposed strict limits. People could only withdraw a few $100s a month, regardless of how much they actually had in their accounts. Some people got so desperate they walked into branches with weapons, demanding access to their own money. The social fabric started tearing apart. What good is a bank account with 6 figures if you can't touch it? Even the United States, the country that prides itself on financial stability, has done this. In 1933, at the height of the Great Depression, President Roosevelt declared a bank holiday. Every bank in America closed for 4 days. People couldn't access their money. Businesses couldn't pay workers. Fear spread like wildfire. It took government intervention and careful reopening to restore even a sliver of confidence. But here's the thing. One of the richest nations on earth had to freeze its entire banking system just to stop the bleeding. So what's the common thread? Why does this keep happening? The answer lies in how banks actually work, and it's not what most people think. Banks don't hold your money like some medieval vault with gold coins stacked in the back. They use something called fractional reserve banking. When you deposit $1,000, the bank keeps maybe 50 in reserve and loans out the rest. That loan becomes someone else's deposit, which gets loaned out again. $1,000 magically becomes $5,000, $10,000 in the system. It's financial alchemy that fuels economic growth. But it's also a house of cards. Because if enough people show up asking for their money at the same time, the bank simply doesn't have it. The whole thing runs on confidence, the belief that the doors will stay open and the money will be there when you need it. But belief is fragile. One rumor, one crack in confidence, and the stampede begins. That's when governments step in. But here's the uncomfortable truth. They're not stepping in to protect you. They're protecting the banks. When Argentina froze accounts, it wasn't personal. It was survival. If withdrawals had continued, the entire banking system would have collapsed within a week. When Cyprus seized deposits, it was marketed as a necessary evil, but the reality was that ordinary people were forced to pay for the mistakes of bankers and politicians. The government and the banks are partners, not adversaries. Banks need governments to enforce the rules and guarantee deposits. Governments need banks to buy their debt and keep credit flowing. And when things go wrong, they close ranks. You, the depositor, the taxpayer, get left out in the cold. We're told not to worry because of deposit insurance. In the U.S., the FDIC insures accounts up to $250,000. Sounds reassuring, right? But think about it. If every depositor in the country tried to claim that insurance at once, the fund would run dry almost immediately. It's not a real safety net, it's a psychological one. It exists to keep you calm, to stop the panic before it starts. It works until it doesn't. And when the banks shut down, everything else follows. Digital payments stop working. Paychecks get delayed. Businesses can't pay suppliers. Shelves start to empty because stores can't wire money for inventory. In Lebanon, factories shut down because they couldn't pay for imported materials. In Greece during the 2015 crisis, people stood in the summer heat for hours just to withdraw €60, barely enough for groceries. Weddings were cancelled. Medical procedures postponed. Lives put on hold because the financial system decided that access to money was now a privilege, not a right. The digital age hasn't solved this problem. It's made it worse. We're more dependent than ever on centralized systems. If the server goes down, if your account gets flagged, if the institution decides to freeze things, your wealth is just numbers on a screen you can't access. In a cashless society, a bank shutdown isn't some relic of the Great Depression. It's a very modern nightmare. And it's not just about personal inconvenience. Think about the ripple effects. Companies can't pay employees, so layoffs spread. Suppliers don't get paid, so production stops. Investors panic and sell everything, draining retirement accounts and pensions. The government tries to calm things down, but every passing day, the lines get longer and people get angrier. What starts as a technical decision in a boardroom spirals into a full-blown social crisis. People start bartering, hoarding, and in some cases, rioting. Desperation doesn't wait politely. This has happened in modern, developed nations. Not just far-off places you see on the news. Greece, Cyprus, Argentina, the United States. And every time, the people living there said the same thing before it happened. Not here. Not us. We're stable. So here's the real lesson. Banks don't exist to protect your wealth. They exist to protect themselves and the system they serve. And when the pressure mounts, you will be the one sacrificed to keep them afloat. What can you actually do about this? First, let go of the illusion. A number on a screen isn't the same as accessible, secure wealth. Diversification isn't just smart, it's survival. Don't keep everything in one place, one institution, one country if you can help it. Physical assets, cash reserves, precious metals, real estate, aren't relics of the past. They're lifelines when the digital system fails. Alternative stores of value matter when traditional ones are frozen. Beyond the personal, we need to understand how the system is designed. Laws around deposit insurance, emergency powers, and capital controls sound like they're protecting us, but they're really protecting the system. If we stay blind to that, we stay vulnerable. If we see it clearly, we can demand better. More transparency, more accountability, more protection for the people instead of the institutions. The scariest part? Banks don't need to physically collapse. They just need people to stop believing. Once that confidence breaks, the countdown starts. And when the doors close, the mask comes off. Banks aren't neutral service providers. They're power structures, deeply intertwined with governments and global markets. You're not their priority. You're a participant in a machine that works beautifully until it doesn't. History doesn't repeat exactly, but it rhymes. Argentina, Cyprus, Lebanon, Greece, the United States, they all teach the same lesson. Access is not the same as ownership. If your wealth only exists because an institution allows it, then it's not truly yours. Real financial freedom means preparing for the moments when the system stumbles. Because one day, the question won't be, what if the banks shut down tomorrow? It'll be, what do I do now that they already have? If this opened your eyes to something you hadn't considered, subscribe. History is full of warnings. I'm just here to help you see them.